Okay, so where we had stopped off in the previous lecture was we looked at example, I think it was question 5.7 in your textbook. We looked at an example of your EOQ. We worked through most of the example, but we didn't complete it because I said to you that the last two questions would be relevant to a section that I hadn't covered yet, which I am going to start off with now. So we'll work through this section and then I'll do those remaining two questions within question 5.7 that we didn't get to complete in the previous lecture. So we have discussed what your economic ordering quantity is. Remember, it's your most cost-effective order size. It's basically saying to you that when an organization places an order for new inventory, this is the level that they should purchase at, because at this level, they are minimizing all of the costs involved in the process. So basically, minimum order price, minimum holding or carrying cost, and the minimum purchase price as well. So we looked at the example of how to calculate at the EOQ the total cost involved. And we also compared that. Remember, we did the one versus the other. We compared at the EOQ what the total cost would be versus at another level what the total cost would be. So we made a comparison. We looked at which would be the preferred level to purchase at. And remember, we did that example, question 5.7, where we took into consideration any discounts that would be received and how that would impact the purchasing decision. Where should we stick to ordering at the EOQ, or should we now purchase at the new level because we've been given a discount? So that's what we went through in the previous lecture. Let's start off with your reorder point and your safety stock now. So your reorder point and safety stock, I'm going to explain it, but the explanation is here for you as well. So in terms of your reorder point, literal to the words, it is saying to you that once the inventory reaches a certain level, a certain point, this is when it's going to signal to the purchasing managers that we now need to place an order. So let's suppose that we calculate the reorder point to be maybe 2,000 units. So if this is your reorder point, so I'm just going to write on the side here that this is the reorder point, 2,000 units. This is basically saying to us that if a company has maybe 10,000 units for the month and they sell off inventory during the month, once it reaches the point of 2,000 units, this is saying to you that this is signaling to the purchasing manager that we now need to place a new order because we've reached the point where these 2,000 units is only going to last us for a short while longer. And we need to ensure that we place an order so that when the 2,000 units are when they are depleted, we do have the order come through from the supplier so we can continue to operate as normal and there's no stop. There's no reason to stop the production process or the normal day-to-day runnings of the business. And so we need to have a point that tells us when to purchase new inventory so that we don't have to bring the entire business to a standstill just because we don't have inventory. Because without a reorder point, what would happen is the business would sell off its inventory. It will reach a point where it has maybe one or two items in stock. Then they're going to place an order, and then they're going to have a situation where they are sold out on items. Customers are going to then be deterred, they're going to be dissatisfied. They are not going to have the goods available to them, so they're going to turn to alternate businesses to purchase from. And as a result, this business is going to suffer from negative impacts such as a loss of profit, a loss of customers, and so on. So Obviously, to avoid a situation like that, a business ensures that it has a reorder point where they reach that point where they know that whatever remains, so like for instance here, the 2000 units, it will last them until they receive the order from the supplier. And then there's no need to bring everything to a standstill. Customers are still satisfied, profits are still as they should be. There's no negative impact resulting from not having that inventory available. So this is why we calculate a reorder point. There is a specific formula to calculate it. I will show it to you in a second. And then we have your safety stock. So your safety stock is a similar idea to what I have just explained to you in terms of your reorder point. Safety stock is held because a business can never ensure that everything will always go smoothly. So you might find that, like I said to you, at 2000 units, if this is your reorder point, and we know that these 2000 units are going to last us until we receive our order from the supplier. Let's just say that this is over a 2-week period. So we have 2000 units available on hand for the next 2 weeks, and we know that it should tide us by. We know that it should be fine. And at the end of the 2 weeks, we will be receiving our order from our supplier. So there generally shouldn't be any issues. However, as I said, circumstances are such that you can never guarantee that everything will go as planned over the next 2 weeks. You might find that suddenly maybe a customer needs a higher amount of inventory than they normally order. Maybe there's a sudden increase in demand, or maybe there is some issue with the supplier and they can't provide us with the goods within the 2 weeks. So maybe it would take them 3 weeks. So there's unexpected surprises that might occur over that time period while you wait for the order to arrive from a supplier. And because of this, businesses generally hold something called safety stock. So safety stock is in place because it's just basically a safety net. It is a cushion it is a cushion in place to avoid any issues should there be an increase in demand or an issue with the supplier or any other issue that might come about. We have sufficient inventory on hand as a backup over and above the 2000 units. So maybe we would have safety stock being an additional 1000 units. So here it's saying to us, although we know we generally only need 2000 units to tide us by over the next 2 weeks, we will also just hold 1000 units as a safety precaution to ensure that should any issues come up along the way, we do have a backup plan, we do have additional inventory. Yes, exactly. It's exactly like that. It's like reserve stock that a business holds. And the point of it is to avoid any unaccounted for circumstances. So this is what your reorder point and your safety stock are about. All of it is explained to you here as well. And we're going to look at two different scenarios in terms of your reorder point and your usage during the time that you wait for an order to come in. So when we calculate your reorder point, it's based on three factors. It's based on your economic ordering quantity, which we've already looked at. We know how to calculate that. Then it's based on something called the lead time. So remember on the previous page, I said to you, let's suppose that it takes 2 weeks before we receive our order from our supplier. This 2 weeks is referred to as the lead time. It is the time between which we place an order and when it's actually received from the supplier. So 2 weeks, for instance, says that we place the order today, it's only going to be received in 2 weeks' time, and that would be our lead time because this is how long it takes for the order to be delivered by the supplier. So you're going to find that during the lead time, and this is where those two aspects I was explaining to you just now come in. During the lead time, you might find that there will be constant usage. Like I said to you, here we know that the 2000 units will last us over the 2 weeks because this is generally a constant usage. We more or less know that on average we do need 2000 units for 2 weeks. But sometimes, as I said, because of unforeseen circumstances, and this is the more realistic approach because you can never guarantee that everything will always go smoothly, we have variable usage. So, under variable usage is where we account for safety stock. We ensure that we have additional inventory on hand should there be some sort of issue, like for instance, COVID-19, where we had so many deliveries not being able to be made from overseas, exports and imports were affected, that type of thing. This is the reason that businesses hold safety stock because you can never guarantee that everything will continue to operate as normal and that you will receive your inventory as initially stated. So we're going to look at the lead time and the usage during the lead time. So as I said to you, the usage during the lead time is going to be, um, yes, it could potentially be because of that as well. So there's many different reasons that would lead to businesses holding safety stock. Like I said, one of them could be because we have a sudden increase in the demand for our goods. And because we normally know that on average it's 2000 units that are generally needed for 2 weeks, but maybe suddenly the goods that we offer become a high demand and there would be a surge, an increase in demand, and we suddenly don't have enough stock to facilitate demand. So that could be one reason why we would have to hold extra stock because we can never guarantee what demand will be like. Then another reason could be exactly that, that there could be a delay from the supplier's point of view, where maybe they are purchasing from another supplier, or maybe they are producing the goods themselves and they don't have sufficient inventory on hand to provide to us. So that's a possible reason. Then you have normal circumstances that are external and are beyond the control of both the business and the supplier. Like I said, for instance, COVID-19, where perhaps you're purchasing from overseas, or perhaps your supplier is getting his inventory from overseas, and then there's a whole backlog. It's a whole domino effect because the first person is not able to deliver to the second person who's not able to deliver to you, and it just continues like that. So excuse me. So that is the type of reason, or those are the types of reasons that a business will hold safety stock. So in terms of the rate of usage, as I said, this is going to be falling, there's two categories that fall into this heading. So you have the constant usage during the lead time, which is not really realistic because of the fact that, as we mentioned, you can never guarantee that it will always be as planned. So this is the less used method. More realistically, businesses make use of a variable usage during the lead time because you always have to account for unforeseen circumstances. So within each of these, there are also different calculations pertaining to your reorder point. So we saw the three factors that affect your reorder point. As we said, it's your EOQ, your lead time, and your rate of usage during the lead time. Now we're going to look at, in terms of the rate of usage, these two categories, how it affects your reorder point calculation. So your reorder point is calculated as the lead, sorry, we're starting off with a constant usage. So under constant usage, literal to the word, the belief is that the business will use more or less the same amount of inventory as always. So basically, they look at historical information. They looked at, in the past, how much inventory did we need from the time we place an order until we receive it from the supplier. And let's use the same example that I had been giving to you of 2000 units being used over a 2-week period. So here it's basically saying to you that we pretty much know that it will be the 2,000 units being used over the next 2 weeks. We are not going to have a situation of holding safety stock because we know that more or less, based on historical information, based on what happened in the past, it was always 2,000 units that had been held for 2 weeks at a time, and it sufficed. It was enough for those 2 weeks. So in a situation like this, where you have constant usage during the lead time, the reorder point is calculated by taking the lead time and multiplying it by the average daily or weekly usage. So it depends on the type of information they've given to you. It's either going to be the average daily usage or the average weekly usage. So there is an example here illustrating to you how it calculates the reorder point under constant usage. It says to you, assume that a company's economic ordering quantity is 100 units. So the EOQ is, remember, the most cost-effective order size. So it's basically saying every time the business places an order, they will order 100 units at a time. Then they say to you that the lead time is 4 weeks. So that means that if we place an order today, we would only receive it in 4 weeks' time. So this is your lead time. And then they say to you the average weekly usage is 20 units. And then the maximum expected usage for a week is 38 units. So the maximum expected usage is just there to basically say to you that we know that we generally only use 20 units on average a week. But just as a backup, the business also sometimes goes up to 38 units a week. So to calculate your reorder point, they've said to you, take your lead time, which in this case is 4 weeks, and multiply it by the average weekly usage, because in this case we have the average weekly usage. So it's 4 weeks multiplied by 20 units a week, and that tells you that your reorder point is 80 units. How we would interpret this reorder point is it's basically saying to you that once a company's inventory reaches 80 units, which is its reorder point, this now signals to the purchasing manager that they now need to place a new order. So this is what the reorder point is telling you, that they now need to place a new order. And when they place a new order, they always order at the economic ordering quantity. So when they place the order, they will always order 100 units at a time. So how it's interpreted is that once a company's inventory levels reaches 80 units, it signals to the purchasing manager that they now need to place a new order for 100 units. So the interpretation is also here for you, so you can read through that as well. A lot of the time, they do ask you to actually interpret it once you've calculated that EOQ, so please make note of that interpretation as well. Yes, you can refer to it as the cutoff. It's basically saying to you that when it reaches 80 units, this is the point at which it will last them, the 80 units will last them over the next 4 weeks. But beyond the 4 weeks, they're going to obviously then run into some trouble if they don't have any inventory on hand. So the 80 units is saying to you that at this point, we know we can continue to operate as normal until we receive our next order from our supplier, but it's only going to last us for the next 4 weeks until we receive the order. Anything beyond 4 weeks is where you're going to obviously then have no inventory on hand. And as we said, it just has a domino effect because customers are dissatisfied, they're going to turn to other businesses. It's going to result in a loss of profits for the business. And obviously, we don't want that bad reputation with customers. So that is your constant usage during the lead time. Then you have the more realistic approach, which is your variable usage during the lead time. So as I said, due to the fact that there are always unforeseen circumstances, that it will not always be as planned, we have to account for issues coming up along the way, such as we said, an increase in demand, a delay in a delivery, that type of thing. So because of this, businesses hold safety stock so that even if there is an issue along the way, they can still continue to operate as normal until they receive an order from a supplier. So when it comes to your reorder point under variable usage, we will need to include the value of safety stock in the calculation, and safety stock is calculated using the formula at the bottom here. It is the maximum expected usage per week minus the average usage per week. And if we are working it out for, let's say, like in the previous example, it was a 4-week lead time, then since this is for 1 week, so it's saying literally per week, then for the entire lead time, we'd multiply it by 4 to determine what our safety stock will be in total over that entire lead time. So this is how we calculate your safety stock. And then to calculate the reorder point, sorry, I'm just waiting for the slide to. Okay, so here we go. So as you can see here in red is how we calculate the reorder point under a variable usage. You're going to take, it's also very similar to under constant usage. The first part within brackets here is exactly the same as we saw here, as the one we saw here. It's exactly the same. It's taking your lead time and multiplying it by the average daily or weekly usage. So as you can see here, lead time multiplied by your average daily or weekly usage. All you're going to do is add on your safety stock. So it is under variable usage, taking your lead time, multiplying it by your average daily or weekly usage, and then adding on your safety stock. So as I had shown you on the previous page, that in order to work out your safety stock, you're going to take the maximum expected usage per week, subtract your average usage per week. But because this is per week, we need to then multiply it by 4 because they said to us that the lead time is 4 weeks, and then that would give us our safety stock. So exactly that is done here at the top. It says to you to calculate your safety stock, you're going to take the maximum expected usage per week, which they gave to you. We're using the same information from this example. So the maximum expected usage per week is 38 units. So it's 38 less, they said to you, your average usage per week. So here, your average usage per week from the same information, they said on average, the weekly usage is 20. So 38 minus 20 is telling you the safety stock for 1 week, but we need to know the safety stock for the entire lead time. So we're going to multiply it by the number of weeks of your lead time, and that is 4 weeks. So we're going to multiply that by 4, and that tells us that your safety stock over the entire lead time is going to be 72 units. So that is now what we add in the second bit of this formula, the 72 units. The first bit is exactly the same as we did in the previous example. It's 4 weeks as your lead time multiplied by an average weekly usage of 20, and then that added on to it is the 72 units of safety stock. So under a variable usage, it's going to be 152 units for your reorder point. And it's interpreted in the same way. So this is saying to you that when the inventory levels reach 152 units, this is signaling to the purchasing managers that they now need to place a new order of 100 units. This is because the 152 units is going to last them over the next 4 weeks until they receive the order from the supplier. And should there be any issues along the way, any hiccups along the way, they do have safety stock on hand to ensure that they can facilitate any of those issues and continue to operate as normal. So that is your reorder point, and we're going to use that in your calculations as well to show how we are. So let me just pull up the example. We're going to use that in the calculations to show how to calculate a reorder point using the information provided. And I'm going to look at question, I'll tell you which one. Okay, let's look at question 5.4. Oh, sorry, no, we did that in the previous lecture. Question 5.6, I think it is. Yes, question 5.6. And then question 5.7, the last two questions there. Okay, so question 5.6 says that sorry. Okay, it says Gilchrist Enterprises produces a number of consumer items, including an electrical stove. A key component part for the stove is purchased from an outside supplier. In total, the company purchases 2,700 component parts each year. So please highlight that. That's very important and relevant to the calculations that will be asked. So 2,700 units is the requirement or the demand for each year. So I'm going to write down here that the value of D, which is the annual demand, is 2,700. Then they say to you that it costs approximately 15 Rand to place an order, and it costs, so 15 Rand is your order cost, and it costs 0.4 to carry, so that's 40 cents to carry one part in inventory for a year. So your holding or your carrying cost is 0.40. The company is operational for 50 weeks in a year. Calculate the economic ordering quantity for the part. Remember, your economic ordering quantity is calculated as the square root of 2 multiplied by the annual demand or requirement multiplied by the order cost over the holding cost. Now here, we don't include the P times I in the formula because, sorry. Remember, the formula generally has P times I added on to your denominator. So I will include it, but remember, we only include this portion if they mention to us that the inventory was purchased using a loan. So they'll say to you that the company had borrowed funds in order to facilitate the purchase of inventory, but they did not mention that to you here. So you are going to ignore that in the denominator of the formula. And so you would only have the value of H, which is your holding cost in your denominator. So here it's going to be 2 multiplied by Your annual demand is the 2,700 multiplied by your order cost, which is the 15 Rand, over the holding cost, which is the 0.40. So this is going to give you an answer of 450 units as your as your economic ordering quantity. So your EOQ, remember, says to you that it says to you that this is the most cost-effective order size. So whenever you are placing an order, the business should order 450 units at a time. So that's question one. Question two then says to you, it takes about 4 weeks to receive an order of parts from the supplier. So this is saying to us that the lead time then is 4 weeks. Then they said to you that the company usually uses 54 parts each week. So your average weekly usage is 54. However, usage can be as high as 75 parts per week. So your maximum usage is 75. Calculate the safety stock. So your safety stock is calculated using the formula at the top here, remember. It's your maximum expected usage per week, which is 75, minus your weekly usage, your average weekly usage, which is 54, which we saw here. And this is going to give you a figure of, sorry, let me calculate that. So this is going to give you a figure of 21, but this is for 1 week. So you're then going to multiply it by the number of weeks that makes up your lead time, which in this case is 4 weeks, and that gives you 84 units as your safety stock. So that's question two. Then question three says to you, calculate the reorder point with safety stock included. So this is using the formula that you see up here in this block. So to calculate the reorder point, you're going to take the lead time, which they said to you was 4, multiplied by your average daily or weekly usage. You have the average weekly usage, which is 54. And then you are adding on your safety stock, which is the 84 units that we had calculated here in the previous question. So that's going to give you a final answer of 300 units. So your reorder point is then going to be 300 units. And then they said to you in question 4, by referring to your answers above, explain when and in what quantity orders should be made. So it's basically saying interpret your values or your answers that have been calculated here. So you're going to say then that when the inventory levels reach the reorder point of 300 units, this signals to the purchasing manager that they now need to place a new order. So I'm going to write it down here for you that when the, gosh, it's not writing. Sorry, guys, I got disconnected there for a second. Can you hear me? Okay, thank you. I have no idea what happened. I literally just got kicked off the session. Okay, so back to how I was interpreting that last question. You're going to say that when the inventory levels reach the 300 units, it signals to the purchasing managers or the purchasing department that a new order needs to be placed, and this order is going to be for 450 units. Remember, your EOQ is telling you how many units needs to be placed. So the EOQ that you had calculated here is going to be the order that you place. So a new order for 450 units needs to be placed. So this is how you would interpret your answers in terms of your reorder point as well as your EOQ telling you that this is how many orders we need, sorry, how many units we need to order at a time. Sorry, I see a question here. Okay, question two, it says it takes about 4 weeks to receive an order of parts from the supplier. And they said to you that the company usually uses 54 parts each week in production. So that 54 parts that are used each week in production is your average weekly usage. I wrote it out here. And they said to you that the usage can be as high as 75 parts per week. So the maximum usage then is 75. Then they said to you that, remember in the first sentence, that it takes about 4 weeks to receive an order of parts from the supplier. So that is your lead time of 4. So they asked you to calculate your safety stock, and that's using the formula that's at the top here. So it says to you to calculate safety stock, take your maximum expected usage for the week, and that is the 75 units that they gave to us. Here, they said it can be as high as 75, so that's your maximum, minus your average weekly usage, which they said to you was the 54 units. So we subtracted the 54, which is here. And then they said to you that this was just for 1 week and your lead time was for 4 weeks. So we needed to multiply that figure, the difference between the two, by 4. And that told you that your safety stock then is 84 units. Okay, any questions here? Oh gosh, sorry about that. So I was saying to you that in question 6 here, they said to you, assuming sales are uniform throughout the year, so 360 days in a year, and it's important that you pay attention to the number of days that they have given you. So before we even move on with the rest of the question, at this point, let's stop and work out. Since they said that sales are uniform throughout the year, this means that every day the sales will be the same. That's what they mean by uniform throughout the year. So let's work out what the daily usage will be. So here, to work out the daily usage, we're going to take the total usage for the year, and you're going to divide it by the number of days in the year. So divide it by 360. So to you, it was in the very first line of this example or this question, 320,000 divided by the 360. So we're doing this right at the get-go because it's easier for us to understand as we go along where your information came from, and we're identifying right from the get-go that on average it is 888.89 units that are being used per day. Okay, so any questions here before I move on? Okay, perfect. So this was the usage per day. Then they said to you, and assuming that the lead time is 9 days, determine the reorder point at the EOQ level. So the reorder point is calculated, as we saw just now, is the lead time multiplied by the average daily. Oh gosh. I have no idea what's going wrong with this screen. Okay, multiplied by the average daily or weekly usage. So here they've given us the daily usage, which we just calculated here at the bottom. So that's the 888.89. And they also told us that the lead time is 9 days. So you would take the 9 days and multiply it by the 889, and that should give you, sorry, the 888.89, and that should give you round about 8,000. You can leave it as a whole number unless they specify otherwise. So it would give you 8,000 at, sorry, not rands, it's units. So that would give you a reorder point of 8,000 units. So it's basically saying to you that once the company's inventory levels reaches 8,000 units, this is when it signals to the business that they need to now place a new order. So that is question 6. Okay, then question 7 is saying to you, outline the financial consequences if only one order is placed during the year instead of ordering at the EOQ level. So this is going back to, and please can I ask that you refer back to your solutions from the other day when we worked with this question. So when we worked with this question, we saw that if we ordered at the economic ordering quantity, we had an order cost of, let me just delete this. Okay, so when we worked out your EOQ in question 1 here, we had an EOQ of 8,000 units. When we worked out the ordering cost in question 3 here, we had an answer of 600 Rand. And when we worked out your annual carrying cost in question 4 here, we had a total of 400 Rand. So collectively, just to place an order and hold it, it was 1,000 Rand. Now, what they're saying is compare that 1,000 Rand to, in the last question here, what would happen if instead of placing in this question, when we calculated the number of orders, it was 40 orders. So they're saying to us here, when we placed 40 orders, it cost us 1,000 Rand in total to place the orders as well as to hold the inventory. Now we want to know, compare that 1,000 Rand to, instead of placing 40 orders, if we only placed one order for the year, and tell us what the difference in the cost will be. So if we place one order during the year, let's work out what the cost will be. So we're going to work out these same costs. We're going to work out the ordering cost and the carrying cost. So here it's going to be if one order is placed during the year, so order cost and carrying cost. So if one order is placed during the year, then that means it'll be one order times the cost to place an order. They said to you here was 15 Rand. So it would only be one order at 15 Rand, so it would be 15. Now, already this 15 compared to the ordering cost here is much lower. So it's 600 Rand compared to 15 Rand. So if we place 40 orders, it's going to cost us 600 Rand. But if we place one order, it's going to cost us 15 Rand. But now let's look at the carrying cost. So at the carrying cost, so I'm just going to make a comparison here. And I'm going to say when it was one order, this is how much it costs. And then when it was 40 orders, we said this was 600 Rand. Okay, then in terms of your carrying cost, we already determined that it was 400 Rand to carry the items that was here when 40 orders were placed. Now let's work it out when one order is placed. Remember, to calculate the carrying cost, the first thing that we need to do is take your total demand for the year or your total requirement for the year and divide it by 2. Average it out and then multiply it by the carrying cost or the holding cost. So the total requirement for the year here is 320,000. Divide that by, oh, sorry, I forgot a 0 here. Divide that by 2, and you will multiply that by 100. So it's your quantity in inventory, your 320,000 divided by 2, and then multiplied, sorry, not multiplied by 100, it's multiplied by the carrying cost. The carrying cost, they said to you here, is 10 cents. So basically 0.10. This now gives us a figure of 16,000 Rand. Now, this 16,000 compared to that 4,000 is significantly higher. It's basically about 400 times higher. So here, oh sorry, not 400, I think it's 40. So it's 40 times higher than what it would be if we placed 40 orders instead of just one. So together, this plus this gives us 16,015 compared to together this and this gives us 1,000. So if we place only one order, the cost is 16,015 Rand. If we place 40 orders, the cost is 1,000 Rand. So as you can see, the difference between the two, the 16,015 minus the 1,000 Rand tells us that we're actually saving 15,015 Rand by placing 40 orders during the year. Because when we place only one order, the cost of holding all that inventory is 40 times higher than if we had to place 40 orders during the year. Okay, any questions here? Okay, so I'm going to give you a quick break. When you get back, we will look at the next question. It became 16,015 because we added the 15, the order cost, plus the carrying cost of 16,000 Rand. So together, those added up gave us the 16,015. Okay, so yes, you can have a quick break. When you get back, we will look at the next part of Learning Unit 5, which is your apportionment of overheads. Okay, let's get started. So the next section of Learning Unit 5 is called apportionment of overheads. And what we're looking at here is three different methods that can be used to allocate overhead costs from one department to other departments. So here what happens is the belief is that within large organizations, because there are multiple departments, it is going to be such that one department offers its services to other departments. So when this happens, it's referred to as interdepartmental services because one department within an organization, and it's usually the service department within an organization that provides services to other departments, and it's called, as I said, interdepartmental services. So when this is occurring, when one department provides a service to another department, it is generally not free of charge. There generally are costs involved where the overhead costs get allocated to the respective department that had required the service. So we're going to look at how to allocate the costs. As I said, there are three methods that we will use. Any one of them can be tested in your exam. And at the bottom here, it's just showing you what what method we will follow when we are allocating the costs. So this is just a general example to help you get the idea of how we will be allocating the costs when we get to those three different methods. Please pay careful attention. It's your normal mathematical rules where we create ratios and then allocate the costs on that basis. So it says to you in the last point at the bottom that the example below illustrates the concept of apportionment of overheads. So allocating our overheads. So it says to you, suppose total rent for a company is 15,000 Rand. The area of, so there's three different departments, department A, B, and C. Sorry, this is supposed to say C. So the area that department A takes up is 100 square feet. Department B takes up 200 square feet, and department C takes up 700 square feet. So you're going to create a ratio just like I have up on the screen. In its simplest form, this is 1 is to 2 is to 7. Once you have that ratio created, the next thing you're going to do is add up all three values, and that gives you a total of 10. So then what you're going to do is say that A will take up 1 out of the 10 portions. So 1 out of the 10. So that is for A. B takes up 2 out of the 10 portions. And C takes up 7 out of the 10 portions. Once you have that fraction now, you're going to simply multiply each fraction by the total amount of 15,000 Rand that needs to be split up across the different departments. So this is then saying to you on the next page that 1,500 Rand out of the total 15,000 Rand rent is going to be paid for by Department A. Department B is going to pay for 3,000 out of the total 15,000 Rand rent. And Department C, because it takes up the most space, is going to pay for 10,500 Rand worth of the rent of 15,000 Rand. Any questions here in terms of how we will be using these ratios? So the 10 is the total. Once you add up the 1 plus the 2 plus the 7, it is the total of 10. that becomes the denominator of each of these fractions, and the numerator is the number that you got when you created the ratio. So as you can see, for A it's 1, so it's 1 over 10. For B it's 2, so it's 2 over 10. And C is 7, so it's 7 over 10. Okay, so this is how we create your ratios, and we're going to do the same when we carry out the three methods involved in the apportionment of overheads. So the three methods that we look at are called your direct method, your step method, and your linear algebraic method. So we're going to use two examples from your textbook to illustrate the way in which the way in which these three methods work. For the first two, we're going to work with example 5.4 in your textbook. For the third method, we're going to work with example 5.5 in your textbook. So let's have a look at example 5.4. We're going to look at how to carry out your direct and your step methods. So I have put up a screenshot of an extract of the question itself up on your slides as well. So you can follow here or in your textbook, but my advice would be to follow the solution up on the screen, and the information you can follow in your textbook. So the entire solution is also up in your textbook, but I am going to go through it with you up on the screen to show you where our figures came from. So example 5.4, let's have a look at it. It's taking a while to load on my screen. Okay, there we go. So it says to you that the following information relates to Fulton Industrial Limited, and the company has three service departments. This is very important, with the following functions and cost allocation bases. Now, remember the idea before we even continue with this example. The idea is that you are going to have service departments and production departments. Departments. So what happens here, and I explained this to you just now when we looked at the heading of the section, the belief is here that the service department provides its services to the production department as well as other departments, and it is not free of charge. So because it's not free of charge, it gets allocated. So you will allocate overhead costs from the service department to the production department. So the service department overhead costs are now being allocated to the production department. So because it provides services from the service department to the production department, it is going to be such that there is a cost that needs to be accounted for, and so the overhead costs of the service department are allocated to the production departments. So that is exactly what is happening here. You are basically reallocating costs from your service department to your production departments as well as other departments as well. So here they've said to you that there are three service departments. It is your admin, your HR, and your plant and facilities department. You don't have to worry about this column, and this is exactly out of your textbook. I'm just showing it to you here so you can see where we're getting the information from. So here you have your three departments, and the column at the end is very important because this is telling you that when we are reassigning the costs, this is the basis that we will reassign them on. So admin services, its costs are going to be reassigned based on the total department capital. HR is going to be reassigned based on how many employees work within the department, and plants and facilities are going to be reassigned on the basis of how many square meters each department takes up. So this in the last column is very important because it's telling you what basis the cost will be reassigned on. So that was the initial information given to us. Then at the bottom, they had given you the three service departments listed out again, together with the two production departments, which were the mixing and the bottling departments. They also gave you in the second row, a second column here, the direct department cost. This is also known as the primary cost. Please write that down here. The primary cost or the primary apportionment. Okay, so please make sure you are taking down these bits of information. Sorry, let me just change the color of this so you're able to see it. Yeah, so that should be fine. Okay, so this is also known as the primary cost or the primary apportionment. So this is what is being given to you in the second column. So it's basically saying the admin department, it has its own direct cost of 162,000 Rand. HR has its own direct cost of 120,000 Rand. For instance, here mixing has its own cost of 240,000 Rand and bottling has its own cost of 540,000 Rand. So it's the primary cost of the department or its direct or its own cost. Then in the next column, it is telling you the number of employees that that particular department has, the area in square meters that that department takes up, and then at the end, the capital investment that that department has. So they've given it to you for all five departments, the three service as well as the two production departments. Okay, so that's all the information that would have been provided to you. So we're going to start off with the direct method, and under the direct method, and please make note of it, if you have the slides, please highlight that. Under the direct method, you're going to find that when we allocate costs, there is no interdepartmental recognition. What this means is that the service departments reassigned or reallocated only to the production departments and no other departments. So there's no interdepartmental. It's just going to go straight from service to production. It's not going to go from service to production and other departments. It's only from service to production departments. So here, like I said, all service department costs are reassigned directly to the production or manufacturing departments. So there's no other departments that will receive costs from the service department. So this is the rule in terms of the direct method. And what would happen here, and you must do this in table format, so please make note of the format of these tables. You are going to draw up the table exactly as you see it up here. The first thing that you're going to start off with is the department's own cost, meaning its direct cost or its primary cost. So as you can see here in the first row, we have primary costs or primary apportionment. So you don't have to include this column. You have two production departments, that was mixing and bottling. And then you have the three service departments, which is administration, HR, and then your plants and facilities. We literally took the information from this column and we copied it into that table. So for mixing and bottling, it was a 240 and the 540,000, which you see here and here. So we literally just copied it into that. Then for your admin, plants and facilities, in admin HR, plants and facilities, it was the 162,000, the 120,000, and the 60,000. And you will see it here as well, 162,000, 120,000, and 60,000. So that was just literally copying the information that had been given to you and pasting it into the new table that you have drawn up. This will always be provided to you, the primary apportionment. You only calculate the secondary apportionment, which we're going to look at now. So the total cost or the total apportionment at the bottom, I'd like you to please write down somewhere. Total cost or the total apportionment is going to be calculated by taking the primary apportionment or the primary cost together with the secondary apportionment or the secondary cost. Okay, so we've taken care of, as I said, you don't need to do this column. We've taken care of the primary cost or apportionment. Now let's look at the secondary apportionment. So with your secondary apportionment, remember under the direct method, the service department costs, we said, get allocated or reassigned directly to the production department costs. So basically, we're saying that these three service department costs, the 162, the 120, the 60,000, we're going to now reassign them to the two production departments. So basically, we're going to take this 162,000 for admin and we're going to split it between mixing and bottling. The same for the HR cost of 120,000. We're going to split it between mixing and bottling. And the same with the 60,000. We're going to take it and split it between mixing and bottling. So we're basically taking the total cost of each of those departments and we are reallocating it to the mixing and bottling departments. So let's have a look at how we do this. So the first one we're starting with is the admin department. And we're starting with this first because it has just been listed out first for us. And they didn't tell us to start with any specific department. So we're just going to start with admin, then we'll do HR, and then we'll do the plants and facilities. So let's start with the 162,000 Rand, which is the administrative cost. We know that we're going to split it between the mixing and the bottling departments, but how do we split it? How do we know how much of the 162,000 Rand we're going to allocate to the mixing department versus how much will we allocate to the bottling department? So how we determine this is using the idea of what we had done here with your ratios. So we're going to basically create a ratio for mixing, create a ratio for bottling, and then we're splitting the 162,000 Rand admin cost. So once we create the ratio, we will then multiply it by the 162,000, just like we multiplied by the 15,000 Rand rent here. So let's now create those ratios. How we create the ratios is using the information at the top in this column and this column. Remember, you don't need this column in the center. So we are starting with, remember again, the admin department. So let's go to admin in the table at the top. And they said to us that when we want to reassign admin services costs, we need to look at the total department capital investment. So in the table at the bottom now, we'll go to total departmental capital. And now we're going to look at, because we are only splitting this money between mixing and bottling, we're going to identify which figures are applicable to the mixing and bottling departments. So here is mixing and bottling right at the end. Its respective amounts from the last column are 1,080,000 for the mixing department. And for the bottling department, it is going to be the 1,620,000. So it's only looking at the figures applicable to mixing and bottling because those are the two departments that are going to be allocated the cost. You're still with me so far? Any questions from any? Sure. Is that the part about the mixing and bottling, how much it is? Okay, so like I was saying to you here, you need to, because we're looking at splitting the 162,000 Rand between the two production departments, which is mixing and bottling. We need to know of the 162,000, how much gets allocated to mixing, how much gets allocated to bottling. So in order to determine that, we need to go back to the information provided, go to admin at the top because this is which department's cost we are allocating. It says to us in order to allocate the cost, the basis upon which we reassign the cost is the total department investment or total department capital investment. So we need to look for that specific heading in the table at the bottom now, and here is the heading in the last column. So once we've located the heading, since we are only splitting the 162,000 Rand between mixing and bottling, we need to look at which of these figures are for mixing and which is for bottling. So there's the headings in the first column, and they said to you here, sorry, let me just show you where we got those from. Okay, so we need to know of these which pertain to mixing, which pertain to bottling. So the headings are here at the bottom. They said to you mixing was the first figure in line with mixing here. So you're basically going all the way across, and that was the 1,080,000. And then for bottling, it's the second one here in line with that. It's the 1,620,000. So now that we know how much mixing and bottling take up of the capital, how much they make up of the capital, we're going to take these two figures and we're going to create ratios out of them. So how we create the ratio is we will say that mixing is the 1,080,000. Bottling is the 1,620,000. Now we can, exactly as we did in this example, and I'll just go back to show you. Remember we said it was A is to B is to C was 1 is to 2 is to 7. We said add up all those figures and that gives us a figure of 10. And then once you have that figure of 10, that becomes your numerator. So when you are saying this is the fraction for each one of them. This becomes, sorry, I think I said numerator. I was supposed to say denominator. This is the denominator of the fraction. The numerator will be these numbers. So it'll be 1 for A, 2 for B, 7 for C. Exactly as we did that here, we're going to do the same thing here. We're going to say add up these two figures, and that gives you a total of 2.7 million. And now we are going to say that this 2.7 million becomes our denominator. So for mixing, it's going to be 2.7 million as your denominator. For bottling, also the 2.7 million as your denominator. Your numerator is the figure that you had written out here. So it's a 1,080,000. And here for B, it is the 1,620,000. So now you've created a ratio for mixing and bottling, and all you're going to do is multiply both of these by the cost that needs to be reassigned, which is 162,000 rand. So basically, you're going to say for mixing, it's going to be 1,080,000 rand over 2.7 million multiplied by 162,000, and that gave you this figure of 64,800 here. And for bottling, it's the 1,620,000 out of the 2.7 million, and that is multiplied by the 162,000 that is being split, and that gave you the 97,200. So now we have taken the 162,000 and we have entirely got rid of it. That's why you'll see it's in brackets here, because we are basically saying that we took the 162,000 and we reallocated it. We took the entire amount and we split it between the mixing and bottling departments. So it would be a zero balance in the admin department. Okay, so that was your admin services. Then you have the next one, which is your HR department. So the HR department is 120,000 Rand worth of costs. So what we're saying is that again, we are allocating it to the mixing and the bottling departments. We need to create a ratio. And once we've created the ratio, we're going to multiply it by the 120,000 Rand that needs to be split, and that will tell us how much we allocate to mixing and how much we allocate to bottling. So again, now let's create a ratio. So we know that the HR amount is only going to mixing and bottling. So you'll go to HR here at the top first. It said to you in the last column that the cost is reassigned based on the number of employees that the department holds. So you're going to go to number of employees located in the table at the bottom, and it is here. So you're going to say then that of these total employees that are listed out here, how many belong to mixing and how many belong to bottling, to the bottling department. So here you can locate the mixing and bottling departments at the bottom. This is saying to you that 48 employees belong to the mixing department and 112 employees belong to the bottling department. So now you're going to say that mixing to bottling is 48 for mixing and 112 for bottling. So you have your ratio. Now let's create a fraction. So add up these two figures. That gives you a total of 160. So now we're going to say mixing is 48 out of the 160. So we'll write it here, 48 out of the 160. And the bottling is 112 out of the 160. So again, you'll write that here, 112 out of the 160. And now when you work out this, 48 over 160 times 120,000, it gives you this 36,000, and then 112 over 160 multiplied by the 120,000 gives you the 84,000. And again, now we took this 120,000 and we split the entire amount between mixing and bottling. And so we have got rid of it, which is why you can see that it's in brackets here. It's basically saying that we took the entire 120,000 rand, we allocated it so that basically left us with zero at the end here. So that's your HR department. And then the last one is your plants and facilities. So your plants and facilities has a total cost of 60,000 Rand. So we listed it out here, plants and facilities. Now we need to know how much of the 60,000 Rand is allocated to the mixing department and how much is allocated to the bottling department. So we'll create our fractions and then we will multiply that by the 60,000 Rand to determine how much is allocated to each department. So plants and facilities, you'll go back to the previous table, the information. They said to you, start off with the table at the top. Plants and facilities is reassigned based on the square meters that that department takes up. So you're going to go then to square meters in the table at the bottom, that is here. Now you want to know of all these, which ones tell you how many square meters is for the mixing department and how many is for the bottling department. So again here, mixing and bottling are at the bottom here. So mixing is the first one, which is 1,375 square meters. And then bottling is going to be 4,125 square meters. So that's mixing is to bottling. Mixing is 1,375 square meters. Bottling is 4,125 square meters. Now you're going to add those up to help us to create a fraction. So when you add those two up, it gives you a denominator of 5,500. So for mixing, it's 1,375 out of the 55. So we'll write that here, 1,375 out of the 5,500. And for bottling, it's going to be 4,125 out of the 55. So here, 4,125 out of the 55. And you will multiply each one of them by your 60,000. So this is going to say to you then, for the first one mixing, it is going to be 1,375 over the 55 multiplied by 60,000, and that gave you the 15,000 here. Then 4,125 over the 55 multiplied by 60,000 gave you the 45,000 here. Okay, so that is how you then calculated the values for each reallocation or secondary apportionment. And all you're going to do then is, remember I had said to you at the beginning, you will need to calculate the total apportionment by summing up the primary apportionment, the direct cost of the department. So primary apportionment plus the secondary apportionment. So here's the primary apportionment in the first block. And all you're going to do here is, and it's only for the mixing and bottling departments that you are summing these up. So its primary apportionment for mixing is 240,000 Rand. You're going to add this to the 64, 8,000, 36,000, and the 15,000, and that gave you the total of 355,800. And then for bottling, it's its primary apportionment plus these three secondary apportionments of 97,200 84,000 and 45,000 at the end. And that would give you the total of 766,200. Okay, any questions here? Okay, so I am going to stop here for today. When I see you again next week, we'll continue with this and hopefully finish off with Learning Unit 5. Please go through this example, just read back at what I had said to you, listen to the recording if you need to, and just practice this example again so you can see where the information came from. And then when I see you again next week, we will do the step method and the linear algebraic. And we'll also complete, as I said, this learning unit and then hopefully start with learning unit 6 as well. Thank you, everyone. Enjoy the rest of your day, and I will see you next week.